As we move closer to the Clarity Act being approved, hopefully it does get done before this year is out, but it looks really good. Everybody seems to be on board. The battle and the problem is in the details, right? That's what do they say? The devil's in the details. And one of the big battles will be banks, traditional finance, against crypto, Web3 finance, if you will. They're going to battle over things like being able to offer rewards or yield on your coins. Well, banks are contending that that crypto platforms or exchanges or tech companies are not depository institutions. You can't offer yield, and so the rules can be changed, right? But they want to state their case as firmly as they can to try to lock crypto and competition out as much as possible. Yeah, they can transfer payment quickly, but you got to do it through us. Only we can offer yield. They don't want you guys being able to earn money in any place other than their deposits, right? Their CDs, their treasury, their IRAs, their money market accounts. They want you putting your money with them, their savings accounts, all those kinds of things. But these tech companies are doing things like Ripple, where they're applying for a bank charter. So it's going to come anyway. I mean, at some point, there will be the first tech company that is a bank, and that is it, and that is that, and that is done. Ripple has also gone as far as applying for a master account with the Fed. If you don't know what a master account is with the Federal Reserve, go ask your local AI. Do a little legwork, guys, and it'll explain it to you. It's a big deal to get a Fed master account. It's a big deal to get a bank charter from the OCC. And banks know it. They can just feel it coming at them. And if they can work it to where they can outlaw the ability for tech companies to become banks, you know they're going to lobby for that. So there's still a lot of inside baseball, a lot of little battles, a lot of huge battles in the overall picture. I guess they're all big. I think it can't be small, right? It's money. So it's all really big. But just keep an eye on it, because before it's all said and done, it's going to be a bloody fight. But it's one that's got to be finished before this year's out. So let's see how this thing pans out. But I got a funny feeling tech is going to get the upper hand on this because it's necessary. So let's give this a quick. Over here, big crypto is versus banks. The battle is heating up in DC as lawmakers clash over the future of digital assets. It's Wall Street versus Web3. Who will win the fight for financial dominance? My money is on the future. I think it's going to be Web3 is going to get the better, the higher, crypto is going to get the better of them because just, winds of change are here, guys. Things are changing. The world may have more than one world reserve currency at some point, but we will most likely have one world reserve digital bridge currency, which is XRP itself. That's my opinion. So let's check out the video. Let me know what you think in the comments. Like, share, subscribe, and bookmark. We'll see you guys on the next one. Till next time, adios.
The crypto industry taking on big banks as lawmakers in Washington debate the future of digital currency regulation. Emily Wilkins joins us now with more on that. Hi, Emily.
Hey, Mike. Well, yeah, a battle between the banks and crypto is heating up over a wide-ranging bill on how to regulate crypto. Now, the tensions brought senior executives from both industries to D.C. this week, including Coinbase CEO Brian Armstrong.
Payments and stablecoins, new types of investments and asset classes, capital formation, credit, like all these things can get reinvented, made more efficient in the crypto world. And that's ultimately what we're trying to do. We're trying to create more economic freedom in the world and update the financial system.
And make money.
At the heart of the debate, banks want to ban crypto exchanges like Coinbase from offering rewards to customers, saying they are too much like interest payments that were banned in the recent stablecoin bill. And there's a lot at stake here. A Treasury Department report found $6.6 trillion could be transferred from bank deposits to stablecoins, driven in part by consumers trying to get the best bang for their buck. Banking advocacy groups are warning that will constrict capital flow. JP Morgan Chase's Jamie Dimon was also on Capitol Hill yesterday, speaking with lawmakers on the economy. But he told me that he's not against crypto, but that lawmakers need to be very thoughtful about any regulations that they're putting in place. And we expect to see more on this bill in the next couple of months as lawmakers are expected to begin marking it up and taking initial votes on it. Mike?
Emily, it's interesting. Aside from this measure of perhaps these crypto exchanges offering rewards, what are the other contentious areas? Because it's interesting. If banks want their own package of deregulatory measures to go through, and they're obviously going to get some of those, and I just wonder where else some of the tension might be.
Mike, it's a great question. I mean, the main crux of this bill is actually trying to regulate crypto, trying to say when is crypto a commodity, when's it a security, and how that needs to break down. But of course, this has actually come up in part because if you remember the stablecoin bill that previously passed, it does prohibit crypto from getting interest, but it allows it for these crypto exchanges. And so what banks are saying is, hey, we see you're working on this other crypto bill. If you could just make that change, close that loophole, we'd appreciate that. Crypto, of course, wants to make sure that it's keeping open. And really, this is the big tension point that we've heard on Capitol Hill in terms of getting this bill done, what that's going to look like. I did speak with one senator, Senator Cynthia Lummis. She's one of the leaders